I can speak to the retail segment within the Vancouver real estate market. There is a V-shaped recovery underway according to Stats Canada, but retail is still not back to the pre-pandemic business as usual. Total Canadian retail sales for the past 12 months were down 6% year over year. But here in BC, total retail was down just under 3%, compared to Alberta down 7% and Ontario was down over 8%. Over the last 3 months, Canadian and BC retail sales are trending up, and there are reasons to be cautiously optimistic. The continued federal government income support programs and low interest rates are helping to bolster consumer spending. But there are significant headwinds, including high levels of unemployment and some uncertainty around government deferral programs. Plus, with rising COVID-19 cases, the way forward may be challenging. Overall, shopping center vacancy is expected to rise to 10% by the end of 2020 and not forecast to decrease until 2024. On a positive note, retail space in Metro Vancouver per capita is 25% lower than the provincial average and 12% lower than the national average, so we have less space compared to other parts of Canada. But with shrinking demand and e-commerce penetration, there is rent pressure. Overall, net effective rents have dropped 3% and will remain flat until 2025. From an optimist lens, 5 of the 10 best performing shopping centers in Canada are here in Vancouver.
Over the long term, it's easier to forecast performance in a given market. 15 months is a relatively short amount of time in real estate. We've seen a V-shaped recovery in some sectors of the economy and more of an L-shaped recovery in others. If you look at the businesses and jobs that make up our economy here, in the short term, I have high confidence in the industrial sector and to some extent residential in certain categories and markets. However, office is struggling in the short term and retail and hospitality will be weak. I would add that we have a provincial election coming up here, and the outcome of that and the policies that follow will surely have an impact on our market. We'll see some negative impacts on property valuation if the government continues to look at taxation and penalties as a way to suppress market demand. What we need is cooperative government with incentives to boost supply. And not just our company, but many others are eager to work in cooperation with government as partners in economic recovery.
For the next 15 months, we're expecting continued turbulence in the market as people try to land on some data points around, withdrawal of government subsidies and, mortgage deferrals unwinding and coming back into the market, how to deal with all the restaurant and retail tenants, what's the future of office, what is the future of rental residential relative to household contraction in the service economy, and to the bad side, and on the good side, the reestablishment of immigration, inflows of immigration as COVID starts to go away and become just part of the background of daily life. So 15 months of turbulent times, but I do think that in the third or certainly the fourth quarter of 2021, which is coming into that 12-month period, that we're going to start to see some significant buoyancy return to the market.